Hi, welcome to UNSIP YouTube channel. Today let us talk about $1 billion questions as to is now the right time for us to invest into property market in Malaysia. Of course, you guys might be thinking, definitely UNSIP is going to say yes, it is the right time because after all, she is also a property agent. Okay, today let us put aside am I a property agent or not, but just look at the situation objectively by basing on facts and data because after all, numbers don't lie. Do you agree? Okay, firstly, if you look at our current recent market, we should know that Bank Negara has actually reduced our SRR from 3% to 2% effective March this year. SRR actually stands for Statutory Reserve Requirement, which means in layman term, how much a bank must have in their reserve before they can actually lend it out to the public. So when they reduce it, means that now the banks have got more liquidity to actually lend it out to the consumer. Think again, as a property investors, what does this mean to you and me? Means that the bank now has got more money to lend it out, and definitely they are going to be more relaxed in their loan approval. Don't you agree? That's the first thing. Okay. Second thing to look at. Let us look at the historical SRR data in Malaysia. Like in the year of 2008, our SRR then was at about 3.5%. Gradually, when it comes to February 2009, it reduced to 2.0 and it even further reduced to 1.0 1 month later, which is March 2009. Remember what happened then? That was just the aftermath of the subprime mortgage, US subprime mortgage. So after that, as market becomes better and improved, in April 2011, Bank Negara actually increased back the SRR to 2%, and eventually in May it increased to 3%, and then in July 2001 is increased back to 4%, and then in February 2016 Bank Negara reduced the SRR to about 3.5% again, and then in November 2019 it was further reduced to 3%, and definitely of course the latest one was in March this year where it has been reduced to 2.0. So if we were to look at the historical data, there is chances that Bank Negara will eventually further reduce the SRR from the current 2% to 1%. Wow. Secondly, let us talk about the OPR, or in other words, it stands for Overnight Policy Rate. When OPR is being reduced, what does it mean to us? To us, it means that the effective lending rate would actually be lower. Next time when we take out loan, the interest that we would need to pay would be cheaper and lower. So let us take a look at the historical movement of OPR in Malaysia. Okay, way back in 2007, then the OPR was around 3.5. Then it actually came down during the 2008 and 9. It came down to all the way to 2%. And then after that, gradually when our market improved, 2011, the OPR actually went back to around 2.7, and then it went up again. And then in the recent years, as of 2019, our OPR actually dropped to 3.2, and then eventually the most recent one, our Bank Negara has actually further reduced our OPR to 2.5. And then there are a lot of market expectations that the Bank Negara will further reduce OPR to as low as 2% within maybe this year or next year. So if OPR is being further reduced, what is the direct impact that us as a consumer would actually receive? There are two scenarios. If let's say today you take up loan with the bank when the OPR is at the historical low, means that today you only need to pay a very cheap cost for the financing that you get from the bank. Okay, as low as now, the effective rate, like most of the bank are giving now, like for my own loan, is as low as 3.5, some 3.6, which is actually very, very low compared to previous last year. As of last year, it was still hovering around 4.5. Okay, so if you really put it into numbers, how does OPR impact us as someone who take up mortgage from the bank? Like as of last year, if let's say I were to take up a 500,000 loan, if the effective rate was still at around 4.5%, my monthly installment is around about 2,351. Then gradually, as of now, the OPR has reduced to 2.5 and the effective interest rate has also been adjusted to around 3.5 to 3.7. So if I were to take now 3.7%, the same loan amount of 500,000, now my installment has actually reduced to how much? Has actually reduced to 2,124. Earlier was 2,351, and because OPR has been further reduced and my effective interest rate has also been reduced to around 3.7, now the installment for a 500,000 loan is only around 2,124. Remember what I said, that it's most likely that Bank Negara will further reduce OPR to as low as 2% within either this year or next year. Okay, if that were to happen, it means that our effective interest rate will also be further reduced, and when that happens, the same 500,000 loan, my monthly installment would then be reduced to about 1,980. So from the high of 2,351 to the low of 1,980, in fact, I would be having a savings of how much? Around $400 every month. That means paying lesser $400 per month on the 500,000 loan. So as a recap, firstly, our SRR has been reduced to 2.0 as of now, April 2020, and we also anticipate a further reduction to 1.0 based on the historical past data. And then OPR currently is also at a low of 2.5, but we expect that it will be further reduced to probably around 2% either within this year or next year, and that would translate to savings in our monthly installment should that happen. What about the second scenario? If today you are not someone who take loan from the bank when the OPR is at a historical low, but you become a saver, that means you save money with the bank. In fact, the interest rate that they are going to pay, the bank is paying for your savings account and also fixed deposit account would actually become lower. As the OPR become lower, your interest rate for your savings account would also become lower, which means that maybe last time when you put 10,000 into a fixed deposit, the bank is paying about 3% per annum interest. But then now, because OPR has been adjusted lower, maybe now they might only be paying you about 2%. Okay, you can actually check it out. What is the current fixed deposit interest rate that they are paying, which I am very sure it will be lower than 3% in conjunction with the reduction in OPR rate. Okay. So it means that savers today become losers because the same money is actually earning them lesser interest. Okay, and also due to the current COVID-19 pandemic, our country need to be put under movement control order, where many businesses need to shut their businesses and many people need to have restriction in their movement, and which result in masses of loss in business turnover, and those businesses which do not have enough cash flow even have got to be forced to close down. Mostly affected sectors are tourism sectors, okay, because the traveling sectors has been badly hit this time due to the COVID-19 pandemic. And if you were to read on the news, in fact, our Malaysia has also come up with stimulus package to combat with this COVID-19 crisis. And so far, our government has already come up with 2 stimulus package. The first one was equivalent to about US 4.8 billion. And the second stimulus package that was launched by our government was around US 57 billion. So in total, our government has actually come up with 61.8 billion stimulus package just in order to combat with this current COVID-19 pandemic. Of course, by comparison, is still way lower compared to US, but then again, our Malaysia's GDP is also way lower compared to US. Up to date, our country's economy has actually suffered a loss totaling up to 63 billion due to this MCO. So as a government, it's very important for the government to strike a balance between containing the outbreak of COVID-19 and at the same time revitalizing the economy, which is why our PM actually announced yesterday that when it comes to the 4th of May, there would be partial resumption of businesses in almost all sectors, but subject to they have to abide by the SOP. What is the aftermath of this COVID-19 crisis? One thing we can be very sure of, basing on the past historical data, after every crisis, after every stimulus package has been dispersed by the government, thereafter the following 1 to 2 years, the inflation would definitely shoot up. If you look at the post-1997 crisis, in fact, our inflation has also gone up to around 6, hovering around 6. And then after the US subprime mortgage crisis in 2008, the following year, in fact, our inflation has also gone up to above 8%. Wow. So this time, we can, if history were to repeat itself, which I think it will, after the aftermath of this COVID-19 crisis, our inflation on the following year would also shoot up. So what can you do as a wise consumer to hedge against this upcoming inflation? Let me reveal it to you now. So what has got inflation to do with you and me? Okay, when inflation is going to go up means that the money today that we have, the same 1,000, may only be able to buy us lesser stuff in the next 6 months or 12 months. That's inflation. Okay, that means your purchasing power would be reduced even though you are still holding the same amount of money, but your purchasing power would have been reduced due to inflation. So as a wise consumer, what should we do to tackle this situation of eventually high inflation, and how do we safeguard our money in a time of chaotic like this? Okay, we also need to strike a balance between protecting our hard-earned money and also growing our wealth. How do we do that? In fact, it's very important for us to ask ourselves this question: what is the best way to hedge against this upcoming inflation? Okay, maybe some might say stock may be able to help us to hedge against inflation, stocks or funds, but we all know that stocks or even funds, the volatility is very high. So probably unless you are really very good at it, like Warren Buffett, you would be winning the market most of the time. Otherwise, you would just heard that there are more people who are losing in the market than winning. So for me, stock market, I would not really recommend unless you are really very good at it. Okay. Second, maybe some may say gold. Gold is one of the best hedge against inflation, which I agree. But then again, if you were to buy gold, gold is not going to give you any cash flow. It would just be like, probably if you're buying the real gold, a bar of gold, you still need to find place to keep it in a safe place. Okay, or maybe there are some who actually trade online, but gold, even though it can help you to keep the value, but it does not give you the cash flow that you need. Okay, so to me, it may not be very suitable for me. Okay, the third one, which is good real estate. Okay, why is it that good real estate is one of the best hedge against inflation? Because if you were to look at our housing prices in the past 20-30 years, we always see there's only one way the property price would actually move in the long run, which is going up. Short term, it may actually come down due to market correction and all that, but in the long run, like more than 10 years, it usually always goes up. Let me show it to you. In fact, properties in the long run always goes up in value. Even for all the properties that I've bought in the past 10 years has all gone up in value as well. So if you look at this one is actually a single story in Green Lane, Penang Island. Look at it. in year 1977, a single story in Green Lane is only worth about 78,000, and you can buy one already. Imagine that time you were to buy one unit of a single story in Penang, Green Lane, and then you don't sell it. You hold it until 10 years later. In 1988, in fact, this the same property has actually doubled up in its value. It become around 158,000. And if you continue to hold on to it, do you know that as of now, 30 years later, this value I got it in way back in 2018. In fact, a single story in Green Lane now, if you want to buy, is around 1 million. Wow. So what does this data tells you? It tells you that property in the long run always goes up in value. That's why I always favor property as one of a good investment, or as one of the best asset to hedge against inflation. Here, if you were to look at the Penang property prices for the past 4 years, ever since from 2016 till as of last year, you can see that in fact our property prices has been on a decreasing trend. So in other words, if today in the year of 2020, if you were to buy into property, one thing you can be very sure of is that you are already buying them at a way lower prices. Of course, some might even argue that the price may even go down further, but how can we be so sure that the price would actually go down even further, and when will be the rock bottom, or will it actually bounce up thereafter? So no one is able to tell when is the true rock bottom, but at least we know that in fact now is actually one of the time when we get into it, the price is already at one of the rock bottom. This we can be very sure of by looking at the chart. So if you foresee that you may be losing your job, the more you should go and buy the property, get the bank loan now while you still have an employment to show, okay? And after that, if you lose your job, but at least you already got the property. When I say got the property, means not any other properties. I want you to get properties which is at below market value, and there is a good rental demand, and you know that you can easily rent it out, and which can either cover the full monthly installment for you or can still give you some extra pocket money every month. If you come across this property, go ahead and buy regardless of you think that you'll be losing your job or not, because eventually, even if you have to lose your job, this property will be paid by the tenant and you will still get some extra pocket money. And at the same time, over the medium to long term, capital appreciation will come in, and after probably 5 years or 10 years, when you start it off, you'll definitely be able to gain a capital gain on these properties that you have invested in. So this is how you actually protect your hard-earned money and grow your wealth. So after what I have shared with you, the facts and data, does it make sense to you to go and buy the property now? It's up to you. You don't have to even buy it from me. You can always go and buy it from any other agent. But what I'm sharing with you are exactly the facts and data that I based on in order to make my own decision whether should I go in and invest now or should I be selling it off now. And if you think that my video has actually benefited you a lot, I would appreciate if you can give a thumbs up to my video if you have not done so. And then remember to subscribe to my channel and click on the notification bell, as I'll be uploading more and more good videos in the near future. Okay, meantime, stay safe and ciao!